Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So we're seeing the stock market right now rising quite nicely. Let's have a look at the Dow Jones here for a minute. And let's have a look here for the last sort of couple of months through here. So I'd have to say it's definitely rising quite nicely somewhere through there, isn't it? We've got a lot of activity through there, and notice how we bounced off there as well too, right? So this is where we are right now, forming this short-term channel to the upside. Really interesting to see what's actually happening through here, right? So a bit of a sideways movement, bit of a breakup, then we had a higher low breakup, higher low. It's like yes, I do expect some sort of a pullback happening soon, but again, this market can just keep going up as much as, you know, as longer than what you think it can. So there's no sign of this this reversing yet. Again, we can never pick the top. And the interesting thing is that a lot of people think that just because the market rallies up and then we get a few down days, oh, the trend's changing. It doesn't work like that. Low, higher low, higher low. This could be some sort of higher low through here as well too. Moving on through the S&P 500. Same sort of thing, right? Same sort of thing. What do we have here? Look at that there on the S&P 500. Just like, oh my goodness. Like, look at all that right up there, right? The support here had a lot of problems through there, as well too. And now look at it just continue up. So this thing can keep, it can just keep going up. Yes, I understand that how the markets work, we get some sort of a pullback, but as long as this market's going up, you don't want to be shorting it. Actually, you don't want to be shorting it at all just because you think it's a top. Actually, don't even get into a market because you think it's a top. Moving on now to the Nasdaq. You like that one? How about those free apples? And same for the Nasdaq. The Nasdaq. What the hell did I come up with that one? The Nasdaq. So we have this thing here, right? Low, and a higher low, and we'll continue rallying up from here. So on the Nasdaq, once again, right, we're getting a very nice push to the upside. So right now, I definitely wouldn't want to be fighting this right now. Now this is on the individual indices itself. It's not on the actual stocks itself. But guys, if you're looking at what's happening right now on the Dow Jones and the S&P 500, we're rallying quite nicely, right? But let's have a look at the transports as well too. Yeah, the transports are actually looking very strong, right? Very strong in my opinion. Why? Look at this here, right? We came down, little stair step. What was this through here? A break below support, and then a break back up. What was that? A false breakout. And now we're rallying back up again. We had a very strong rally, and now we're breaking back down. This is previous resistance through here, isn't it? Previous resistance. And if I do that through there, as you can see, right, this resistance is now becoming support through here, rallied back up. So as you can see, right, we're getting a very nice move to the upside. So from a low to the high move on a Fibonacci level basis, we could see that this whole level through here, even if we get a little bit more of a pullback, I would expect to see the transports actually holding quite nicely through here. And then continue an upward move, right? There's actually nothing wrong with actually this transports is looking very nice, right? We had a nice move up, then a nice pullback through here, and then we had another nice move up, and now we're having a nice pullback. And then yes, I actually do see the transports probably actually heading right back up towards this 2100 level. Now, moving on through to the S&P 500, okay? Oh, sorry, the Dow Jones. I'll move on to the Dow Jones. I've actually had a target here. I've had a target of 29,000 on the Dow for quite some time. Now, let me show you how I come to that level through there, okay? So 29,000, probably 28 on a minimum basis. So what I like to do is I like to find the channel, right? I like to find there's a bit of a channel where the market has been pretty much channeling from the high to the low point. High. What is this here? Look at this here. Break down very quickly, and then a complete reverse. What was that? A false breakout because it broke below support, and then it rallied straight back up, and now we're heading back up through here. So what you do is, once you see this sideways movement here, especially this false breakout, now what you do is you draw a line from the top down through to the bottom. Okay, down through to the bottom, and then you project that up, and then wherever the line meets is where it's likely to go to. So as you can see, right, that's actually an ultimate. That's 29,000 up as much as 30,000. Now that sounds crazy, I know, but hey, we could be getting ready. If we're gonna head into a recession, we're likely to see one big more move, right, before we actually start to do that. Now, I would say 29.50 is that level there, the ultimate level. So I would say on a conservative basis, look at that 29,000 level there. And that's how the reason why that's the projection of the sideways pattern. Look at any sideways pattern. If you get a sideways channel for quite some time, you can identify the lows and the highs, get the channel, project that up. And once it breaks it, that's where it's likely to run to. So really interesting on the Dow Jones. And that's how, guys, that's not just me throwing a number out there about 29,000 Dow. It's a projection based on what this pattern is showing me, that if we do break, then we're likely to see a 29,000 Dow coming really shortly. Now, it's not going to happen straight away. It's probably going to take maybe 3-4 months, maybe a bit more, maybe short. We don't know. But there's a good probability of that actually happening in the markets on the Dow Jones. That does not mean that every single stock in the Dow Jones is going to go through a big vertical move as well too. If you see whatever chart you're whatever market you're trading, you trade based on that. If you see a really good trade based on GE, you trade GE only, not just because you think something's going to happen with the Dow Jones. Make sense?